Welcome back to Golden Rule Radio, and today we're going to ask you to bust out the Chicago and ask the question, where do we go from here? Because we're pushing into the 1500s on the gold price, silver following suit, and we are going to jump directly into some of these charting pieces to take a look at.
Well, and with this move today, Miles, we've got gold now up 30% since last August, which was the confirmation bottom signaling the start of the next macro trend bull market.
Even since June of this year, when we broke above that previous ceiling we've been talking about for a couple weeks now, we're up 13%. In fact, I put that high mark target at around 1485, and we blew right through that today up into the 1500s. Now we're pulling back down a little bit towards it, which isn't surprising, but I think there's something important to point out here. The fact that there was no resistance whatsoever at what was clearly the next market level on the way up tells me that any movement down going forward has nothing to do with bearish intervention. These are not bears looking to short the market. The only time we're going to see the price come down now is bulls who just want to take some short-term profits. So the bulls are firmly, if not exclusively, in charge of the gold market at this point, from what I am seeing and the way the markets are moving around.
We have to remember in 2013, that was absolute government manipulation. That was the CFTC coming and raising margin requirements and creating a snowball effect. And so I do fully expect if gold gets too much attention here, that's going to be the fundamental reason for a strong pullback to me, is that it will be attacked in the futures market. And I'm not saying, Miles, that you're wrong, that it's all technical. And I know that to me would be an underlying cause to see that.
Sure, and that's where I always get back to the idea of, to me, not so much fundamentals. I don't want to use the word fundamentals, but let's say news. News doesn't change the direction of a market. News just speeds up or slows down. It changes the velocity in which the technicals and these longer-term macro fundamentals are driving the trend of the market over a period of time. So yeah, I would consider a government intervention a news item, even though it's a news item that encompasses billions of dollars of push or pull one direction or the other into a market. So, and I think we want to bring that point up again here in a few when we get to the Dow, because we look at some Dow action, and at this point, I'll want to bring up, to me, the only thing that's pushing the Dow higher is exactly that, government intervention.
And you're also starting to see gold get a lot more attention, in the mainstream media. We have Bloomberg on our TVs most of the day and other channels, and you're seeing a lot more advertising for gold. And, as it should, we broke $1,500 today as we record on Wednesday afternoon. But really the big move today, Miles, was silver. Silver hit some levels that you're pretty excited about. And, we're up about 4% today. We broke through that 1725. As we speak now, we're back below that. But what did silver give you as far as an outlook today, Miles?
Sure. Well, we said that was the first real test, right? I mean, those were the previous highs from the previous trading channel last year. So 17 and a quarter is pretty big to me. It's not surprising to see it stall out there, but we are up, or at least the range up and down just halfway through this week has been 7%, 20% since June this year. And you compare that to gold. When gold broke through that ceiling, those ratios started tightening. I mean, we went from 92 down to the higher 80s, 87, 88. We have bounced back up closer to 90 just on today's move. But silver's starting to make that first leg, the first couple stages of that rubber band snapback that we've anticipated for a while. So when gold broke that 1375 ceiling, silver still had about 25% to go to play catch up. It was still only $15. Well, silver's now only 14% below its ceiling, its ceiling of 20. So I'm still saying the only number I really care about is 20 because that's the floor. But for Pete's sake, we're still 15% below the floor. We're in the basement. In fact, we were 25% in the basement. So
I would actually argue that we're in a high-rise building and you have started climbing floors, because I like your analogy that you're talking about here, floors and ceilings. 1610 was a huge ceiling for you, right?
Right.
Now we're seeing 1725. To Eric's point, that's another ceiling. We break through that, then we are on our way to the next story being 20. But we're in a high-rise building. I mean, where does it end? This is, we don't even know. We can sit here and talk about $2,000 gold and silver being back at 50. at some point in the next couple of years, and that's not even really a stretch. So there's a lot of stories in this building, and Miles, you do such an amazing job for me technically, and for this program, these listeners. You're talking about $1,500 gold. We said back the truck up when we were in the 1200s, right? We've given you entry points here, and that's really important to keep in mind. There are stories, and if we come back down to test the floor, that's perfectly natural. We're in a new room.
Well, and I think this gets back to our fundamental discussion, because moving over to the white metals, you're seeing a very different different usage of the word story, but a very different story here, in that platinum and palladium are not doing exactly what gold and silver are, or at least today they didn't. Platinum is up today while palladium's down, but silver and gold took a panic move in the markets today. This was a 24, 48-hour panic move. Platinum did not. Platinum's an industrial metal. This is not a market crisis. This is a currency crisis that we're seeing kick off first. There are lots of analysts out there that have been recognizing for a number of years that the next major crisis to hit the United States is going to be in the currency and in the debt markets. Mm-hmm. So it's not unreasonable that what we're seeing right now, and the first cracks in the hull of the ship, are taking place not in the commodities as a whole, and certainly not in the equities market, which is up, but we're starting to see those cracks show themselves in alternate currencies. I think the first inkling of this was the Bitcoin thing a couple years ago, and now we're seeing gold up over 30% just in the last couple of years. I think we're starting to see the first resemblance of a pretty major currency crack up taking place here. And that was signaled last week with the interest rate drop. So one last thing on platinum before we move over to palladium and the other markets. We talked about the opportunity in silver that's now starting to tighten. At the same time that silver was lagging 25% behind gold relatively between those charts, platinum is still 33% below in its relative charts. It's got 33% to go just to hit the ceiling that gold has already broken through, and silver's halfway to. So we've been screaming silver for a while. We've obviously also been screaming platinum. Get involved. Get involved in the platinum markets, because those rubber bands snap very hard when they do.
And moving on to palladium, just real quick, Miles, palladium seems to be kind of the redheaded stepchild of the metals right now to me. Every day it seems that gold and silver have a big move up, palladium's down. But on palladium's big days up, gold and silver and platinum tend to be down. It just seems that palladium's trading inverse to the other three metals. It seems like it's moving with the equities market and against the precious metals and vice versa.
Oh, you're right. I mean, it's down 10% from its high just a matter of weeks ago, right? And granted, it had a nice little rally. Meanwhile, you're seeing the silver run that you guys alluded to, 20%, but silver's up 25% from the low earlier this year, and it has outpaced gold. That's why the ratio is down below 90 again. So palladium, you're right, very industrially sensitive. Mm-hmm. To me, it is telling a story that has yet to really be fully understood.
Well, Miles, let's move into the Dow. The Dow had a tumultuous week. Really, the whole equities market did.
That's putting it lightly.
but they did end up, they had a pretty severe down day this morning, but they finished pretty flat. The Dow was the only one in the red. But what did you see with the sell-off that took place this week?
Sure. I mean, down 7%, hard bounce today, and is currently sitting off about 5% of the previous highs. But the hard bounce was right in between the 782 and the 618 fibs. So good place to have some standing buy orders on a pullback. The question is just how hard does it continue to bounce? We've already topped back up at the 618 and started to inch back down now. I'm telling you, I still think the Dow's going lower, and I think we're going to see something in excess of the 19.5% drop last December. I think it's going to scare a lot of people. I think it's still, on a macro scale, fundamentally, we're still talking with inflation over the next 20 years, the Dow will hit 50,000 at some point in our lifetime, obviously. So when you go from 6,600 to 27,000, and you don't think you're going to have some kind of pullback, you just don't understand how markets work.
Well, and I think one of the things that initiated that sell-off this week, as well as the rise in the metals, was, this not restarting the tariff war, but it like you kind of alluded to earlier, it went from a war with tariffs to a currency war.
Right.
Trump came out and said that I don't have his exact quote, but it's unfair that China is able to manipulate its currency, all while tweeting angry tweets at the Fed to lower interest rates, which to me
the tariff
seems
war
like,
is a currency war,
right?
Isn't it?
No, that's absolutely part of the issue, and by them sort of disconnecting from the dollar and manipulating their currency lower, one, they had to stabilize the markets. They had to get out and try to get everybody to trust the renminbi again, and that's going to be really telling how that plays out here. But that's been China's advantage all along, is to peg to the dollar. And there's a really good insight expressed on the McIlvaney Weekly Commentary this week. So I would send you to our website, McIlvaney.com, and tap into the McIlvaney Weekly Commentary for far more depth and analysis on just exactly the impact of the Chinese tariffs and the Chinese currency manipulation on how it's impacting our equities markets and how it's impacting gold domestically. It's an absolutely huge primary fundamental in what we're seeing.
Well, Tori, and to that point, the other thing that we're seeing just absolutely get hammered this week is oil. And is this coming from the tariff currency war, or is this something completely separate in your opinion?
I think it's separate. Oil's a lot like gold in that sometimes it can be a barometer, and I think that it's telling of global slowdown. And it started, to me, weeks ago with all the negative news in the automotive industries, and it too has a lot of justification in its technical analysis for why it would be coming down to where it is here, and you're going to see some divergence with that with natural gas. But to me, yeah, Eric, it's telling us that there are global economic concerns, and gold and oil will tell you that they're sort of the canary in the coal mine oftentimes at the same time.
Welcome to the world of the Biggest Loser currency edition, where whoever gets the cheapest, the fastest wins. At least the governments do. The people certainly don't, but the governments do. And then throw some tariffs on top of that and see where we go from here. So one last thing I want to bring out, just because it's Wednesday and we did have Fed Chair Evans, Chicago Fed Chair Evans, speak today in follow-up to the Fed announcement last week. So there was one key point. He did come out and say they had penciled in at least 2 rate drops, or he expected to see at least 2 rate drops, quarter point each this year. We've had one. Makes you wonder, looking at the Dow and the direction the Dow is going, and my expectation there, looking at some of these tariff discussions and the fight taking place in the currency markets, is 2 enough? I mean, in a world where I think interest rates should be going up and they think it should be going down, and we've got reports coming out of the IMF about the values and benefits of negative interest rates.
No, it's even more than that. I mean, Bullard came out hawkishly today and basically said, hey, the Fed should wait and see what the impact is on this one. So that's not even, in his opinion, an opinion stated that there should be another cut. He kind of thinks, hey, let's see what's going on. Meanwhile, Trump trade advisor Navarro says that the Fed should cut rates further, at least another 75 to 100 basis points. So nobody can figure out what the right direction is. And that to me is huge too, because that goes to show that the economy is in turmoil behind the scenes. And it reminds me of an interview transcript that I read with Ben Bernanke, Henry Paulson, and Timothy Geithner. And they stated in there openly that they knew 2 years in advance that the 2008 housing credit bubble economic crisis was coming. And I think that we're in that stage right now. They know that something's coming, and everybody's scrambling, trying to figure out the best proactive measures to be taking to soften the blow.
Sure. Well, I think UBS has already figured that out.
Yeah, just charge people for their deposits on account.
Right. I mean, they're already negative on not on the average client. They're taking their absolute best clients and paying them, generously paying them a negative interest rate.
Paying them, charging them. And, there really is something going on here, Miles. Like I mentioned this last week, we're not a fear-mongering network, but something is going on right now, and it has to do with the currency manipulation. It has to do with the price of gold. It has to do with the IMF reports coming out, Key Bank telling people they can't store bullion in their safe deposit boxes anymore.
Or cash.
Or cash.
Eric, I think turmoil is probably an understatement right now. There's too much news for us to cover. This would turn into a 30-minute program to just touch the surface. I mean, we're not even talking about the Iranian geopolitical tensions and what's going on in the oil world there, and that should be driving oil up, if not for all the other economic concerns. But that being said, I think we wrap this up. We'll cover more of this next week.
So thank you again for joining us this week. If you like what you heard, hit the subscribe button, ring the bell for notifications. You can find us on Twitter at ICA Gold, Facebook, McIlvaney Financial, or head over to our website, McIlvaney.com. As always, watching these markets, if you would like to sit down with us or one of our fellow advisors here at McIlvaney Financial Group, we can be reached at 1-800-525-9556.
Thanks for listening.
Have a great week.